Gold prices are booming constantly, and everyone is rushing to buy it for profits. Is this really the golden opportunity of a lifetime for investors? Or is it just a hike before a price crash? So what will be the future of gold? Let's first take a breath and understand what's really going on with gold. Gold is certainly on a roll. Its price has increased by more than 40% over the past year. In late April, it rose above $3,500 per troy ounce. This marked an all-time record, even allowing for inflation, exceeding the previous peak reached in January 1980. Back then, the dollar price was $850, or $3,193 in today's money. Now, what is causing these price hikes? Well, there are a number of factors involved, because the world is in chaos. Economic uncertainty is everywhere. The unpredictable changes in U.S. trade policy have shaken the markets. Inflation is stubborn and keeps eating away the value of your money. So the investors are scared. And when people are scared, they don't put their money into risky bets. They run to safety. And what's the safest place in human history? You guessed right, it is gold. Gold is seen by many as a solid and safest investment. Gold has always had a mystique. Long before we had paper money, bank accounts, or crypto wallets, civilizations used gold as the ultimate symbol of wealth and trust. From the Egyptian pharaohs to Roman emperors, gold wasn't just shiny, it was power. It was security. And still today, gold is the most stable, safest type of wealth where investors can save their money in the times of crises. But all this massive hike in gold prices just cannot be caused by individual investors. The central banks of many nations are the major drivers here. The gold prices have been on a steep upward curve since late 2022 because of central banks. They have been net buyers of gold to add to their official reserves for the past 15 years. And that suddenly accelerated in 2022. In 2022, the reserves of the Russian central bank got frozen in the context of the invasion of Ukraine. The reserve managers of global central banks around the world started realizing that their reserves are not safe. They thought, what if we buy gold and hold it in our own vaults? And so we have seen big structural five-fold increase in demand for gold from central banks. Central banks have collectively bought more than 1,000 tons of gold each year since 2022, up from an average of 481 tons a year between 2010 and 2021. Poland, Turkey, India, Azerbaijan, and China were among the leading buyers last year. Experts also believe that independence from dollar-based banking systems has been a major driver for central banks. Countries like China, Russia, and Turkey are under the constant fear of weaponization of dollar system. Their central banks are big buyers of gold. Now the big question is that what happens next? Will the gold keep soaring? Or will it dump its value into ruins? Some experts believe the upward trend will continue, fueled by unpredictable U.S. policy, inflationary pressures, and central bank buying. Any event of a recession in the U.S. economy or an escalation of the trade war could push gold to hit $4,500 in the next years. The U.S. stock market is 200 times bigger than the gold market. Only a little amount of turbulence in such investment markets is enough to drive gold upwards. But many other experts are concerned that the price of gold has risen so far and so fast that a market bubble is forming, and bubbles can burst. Back in 1980, for example, the dramatic spike in the gold price was followed by an equally remarkable correction. The gold price dropped from $850 in January 1980 to just $485 in April 1980. By June 1980, it stood at just $297, a decline of 65% from its peak. So it's clear, the gold prices will ultimately fall significantly. If the world get a Ukraine peace deal or a rapid trade de-escalation and the central banks ease off their buying spree, short-term pressures stimulating the demand would subside eventually. This will bring the shooting gold prices down. But remember that the gold will still remain gold. It will not turn into dust. The prices might fall back from their current peaks. But the gold itself? It's not going anywhere. Gold will still be one of the most stable physical assets on Earth. It doesn't rust. It doesn't default. It's the real wealth. And in the long run, it protects you from the slow, painful devaluation of paper money. So before you rush to buy gold at the top, remember, sharp increases in value are often temporary. They grab headlines, spark hype, but they don't last forever. Wait for the dust to settle. Be smart, be patient, and share your thoughts with us about the recent ongoing gold game.